A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will try to complete the algorithmic setup involving the indicator money flow index. This is going to be the third and the final part of this series involving the MFI indicator. So let us now get started. We head to the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the job of algorithm development to trade in the financial markets easier. In prior two sessions, we had seen that we have instrument subscription in place where the Euro USD is being used as the instrument of choice. Afterwards, the position amount was defined at zero. I have added these two MFI blocks of the 4 hourly candle period, and latter two are of 15 minutes each. To look at the price volatility and define certain requirements, we are also taking the help of Get Historical Candle and to pinpoint the exact entry point. These 10-second blocks have also been used. And on the lower side, we have these calculations in place where we have defined the variables of uh, conditions which we had put in place for the execution of the buy trade. So this is it, the buy side of the algorithm. Now we will have to build a symmetrical formation for the execution of the sell trade. So I will give you a brief refresher of what the logic is for the execution of the sell trade. We want to be trading with the trend, and for that we are relying on the 4 hourly time frame to act as the guiding factor. Let me change this to 4 hours. All right, we have the formation, the chart of the Euro USD on the 4 hourly time frame. We want to take the sell trade when we see the money flow output values are on decline. So for that, we are going to compare the MFI output of the last 4 hourly candle close with the MFI output of the third last candle close, and we will have the interval of 8 hours, and over those 8 hours the MFI output should have gone down, so that will mean the money is flowing out for the underlying instrument, and this might be the time to look for shorting opportunities. And for that we will take the help of lower time frame where we will try to optimize the entry point. And by optimizing, I mean that we will be looking to short it when where we have some sort of correction after a steep decline. As you can see, this kind of scenarios where we have seen the MFY again climbing back above 70, and after it has climbed back above 70 and spent some time there, when it starts to decline again, that is the time we want to go for the short sale. So that's when we will be looking to short the Euro USD. And for that, we are relying on the divergence. We will take the MFI output of the last 15-minute block and we will compare it to the earlier MFI block. And it should have started to decline while still holding above 70. But when we consider the price action data, it should continue to show a rise. So that will mean there is a divergence happening, and in coming time, we are expecting the price action to follow the course of the MFI and start to decline on the lower side. So we will consider the 15-minute candle close, and it should be higher compared to the second last 15-minute candle close, while the MFI output has started to go on the lower side. So that is going to be our requirement, and we will be placing the order still on the higher side as we are not expecting the train to turn just yet. So we are counting on it to continue for some while, some more move on the higher side, and after that a reversal of sort to take place. So for that we are relying on the price action data, and we will take the help of difference between the candle close and the lowest point of that last 15-minute candle, and whatever is the difference we will multiply it by 2, so that much we will add to the last tick tick price, and that will be our entry point for the execution of the sell trade. And same difference we will keep as the stop loss also. Okay, so that's what the logic is. Now we are ready to start adding the requirements to the Visual JForex board to define the conditions for the execution of the trade. So this is the buy side, and now we have to build a mirror image of this. All right, we have defined these variables earlier. Let me start with adding a couple of if blocks. I think we are going to need 8 of these, if I remember correctly from what I had used for defining the conditions for the execution of the buy trade. And it will be followed by a pending open market, pending open order block, trade command block. All right, here we need the MFI index 10 to be less than the MFI index 14. First thing first, it should be first input less than second input. Then we consider the lower time frame output of the MFI, and it should have money flow index 15 and 16. These two should have values above 30, sorry, 17 or 30. First input greater than second input. Again, first input greater than second input. And then it should start to show a decline. So we will need the MFI output of last 15-minute block to be lower than the second last. So we need money flow index 16, sorry, 15 to be less than money flow index 17, not 17, 16. So this will be first input less than second input. All right. Then we consider the price action data, where we need the last 15-minute candle close to be higher compared to the opening price. So we are going to take the candle 17 candle close and compare it with opening price, and it should show an increase. So first input greater than second input, and candle 17 candle close needs to be higher compared to the closing value of the second last 15-minute candle. So we take again candle 17 candle close and compare it with candle 18 candle close. All right, so we have first input greater than second input. All right, so we have divergence of sort taking place, and that's where we place the order for the execution of the sale trade. So whenever the price starts to dip below the last 15-minute candle close, we will go for the execution of the trade. So we need candle 17 candle close and compare it to the last two 10-second blocks. Candle 17 candle close will be our common input, which we will compare to the closing values of candle 19 and candle 20, which have the look back period of 1 and 2 respectively. candle 19 candle close needs to be less, whereas candle 20 candle close should have been higher. Alright, so first input greater than second input. Buy, and this will be sell limit order. Now we have to define the variables for this trade command block. Prior to that, I will put in place this block on the lower side, so that will make the formation a bit easier to understand. Okay, and we join these two multiple action. Coming to the defining of these variables, we will do the job one by one. So first thing we have to do is get the price point for the execution of the trade, which we will arrive just like we had done for the buy side. So we will take the difference between these candle 17's closing value and the low, and we will multiply it with 2, and we will add it to the last bit candle close. Okay, so we are going to need, let me check how many. We are going to need 3 of these calculation expression blocks. In the first, we have to get you can take bit candle or ask candle close, anything will do. And add the difference multiplied by 2. So this will be a 1 plus a 2 into a 3, and this will be our sell execution point as E, which we need to put in the trade command block. Now coming to the default instrument, remains as it is. Trade amount I will change to 0.1 million, slippage of 2 pips, stop loss and take profit. We need to define these two variables. So I will create this new variable named SSL, and now we have to define the SSL's value. For that we are going to rely on the calculation. For that we take into account the actual difference between the last 15-minute candle close and low. We then multiply it with 2 and the pip conversion factor, which has the start value of 10,000. So this is going to be A1 into A2 into A3. The result of this calculation will be assigned to this variable. And whatever is the stop loss, we will simply multiply it with 2 to arrive at the take profit to make the risk reward ratio 1:2. So this will be A1 into A2. And this will be assigned to this newly created variable. Alright. And order validity, we had defined it for 1 hour last time around. So we will use that variable as it is. So with this, we have defined all the mandatory input requirements for the trade command block. Comment is optional. Now I will disconnect the flow here and join it over calculation expression block, and from here to multiple action. Okay, so we have this formation in place for the execution of the sale trade. And with this, as you can see, our symmetrical formation is complete. So this is the fully functional algorithm. Just to be sure, I will color code this flow, trade iteration flow. And yes, it is flowing smoothly till the very end. That means the execution part of this algorithm is complete, and I hope you have been able to understand the logical as well as the execution part of the algorithm involving the MFI. And do try it out on your JForex platform, and once you are done with it, you can carry out the testing on the historical data using the JForex platform, for which the link has been provided. For further coverage of the market developments, do check out the Dukascopy analytics page. We are also available on the Facebook. You can reach out to us there. Thank you all for joining in. See you next time around. Till then, goodbye.